Alright traders, so welcome back, and in this video I want to discuss about the moving average and CCI trading strategy. I've been using this for a while and I'm getting quite good results. The main reason we come up with these strategies are to minimize stop loss and to maximize those returns. It's not possible that we don't hit a stop loss at all. A lot of people have that misconception that stop loss will always be out, but our main goal is to get those 6 out of 10, 7 out of 10 good trades and just 3 out of 10 stop loss trades. So let's try to understand what all of this is about. And if you're new to this channel, make sure you like this video and subscribe to this channel so that we can keep producing content like this to help you in your trading journey. Right. So I'll be using two moving averages. I've been using moving averages a lot. I have uploaded a video just yesterday. So make sure you check that out if you're a moving average trader. So in this strategy, we'll use two moving averages, 25 EMA, the 25 period EMA and the 50 period EMA. So we'll use two exponential moving averages, and I'm using the CCI on the side. So if you don't know what these are, make sure you check out on YouTube or Google. But keeping the settings of 25, 50 on EMA and CCI, we'll keep the standard 20 setting, and the 100 is the above 100 is the overbought zone, and below minus 100 is the oversold zone. So that's what the setup is like. So this strategy is actually based on the basic principle, Dow theory, that if there is an uptrend in the market, keep on moving with the trend, only go long. And if there is a downtrend in the market, keep on the short position, don't take a long entry. So stay with the trend. That's my best advice to you. Right. So there are a couple of rules that are involved in this strategy. Let me discuss about them before I show you a couple examples. You can use this strategy on any time frame that you want. I'll be showing this strategy on 1 hour time frame, 15-minute time frame, but it's all on you. What's your trading plan like, and what is the time frame that you are comfortable in? And a couple of rules before I get started. Number one, we are looking for a moving average crossover. We have a 25 short term average and a 50 long term average. So, a crossover means when these two lines are intersecting with each other. If the 25, the short term average, goes below the long term 50 average, that's a sell signal. At the same time, when a short term average, that's a 25 in blue, when it goes above the long term average, that's the 50 in this example, that's a buy signal. But I will not be taking my buy and sell entries on these crossovers. I will be putting in more filters to get in, more juice and better trades. So I will use, so number one, rule number one is find the crossover. So in this example, right now I'm looking at the charts of USD INR on the 1 hour time frame. So we have got a crossover around 22nd of 21st of June. That's a negative crossover indicating a sell position. So I will use this crossover only to filter or scan my trades. So right here, I know things have become bearish. It's a short signal. So after this point of time, I will not be taking any buy trades. I will only go sell. That's number one. Number two, what we are trying to identify is with the help of a commodity channel index CCI, I'm going to identify overbought and oversold zones. So above 100 is overbought and below minus 100 is oversold. So when you give this negative kind of crossover, what are we looking for? We are looking for an overbought trade because we are looking to short, and the best time to short would be when you come in an overbought zone. So what I do is after the crossover, I wait for the first overbought trade. I look into the what's the first overbought trade, and then that is the exact time where I'll be taking my short entry. That's all the strategy is all about. And you can use this, you can use the candlesticks to take a good entry. For example, in this case, we can see a hanging man, a doji, and a shooting star at the same time. And this was confirmed by the overbought on CCI. So that's a very, very good trade. So we just need to make sure that the order of these averages 25, 50 are in order. Otherwise, if 25 goes above 50, it'll give you a buy signal again. So things can go wrong. So make sure the order is right and take the entry on the first overbought. If we go keep on going further, for example, another entry would be around here on the second overbought. That's nothing wrong with that, but because we have come down a lot, the selling pressure will minimize, and you might not get as much meat and juice as possible. So you can take entry over here. At the same time, you can take another entry at this overbought. The further you keep on going, things will become choppy. And make sure when you get the overbought, don't take a blind entry just like that. Get some kind of candlestick pattern, or when the CCI line goes below 100, that's the time when you want to sell, not before that. So use candlestick analysis in this approach. Another example on the USD INR would be around the 8th of July. So we had a positive crossover when the 25 went above 50 average. That's a buy signal. So when we have a buy signal, I'll only be taking long trades. I'm not looking at any short trade. So now I want a oversold condition. So we will be going long when? We will not go long at the crossover, but now we look for when the stock goes oversold. And this was the time when the stock went below minus 100 on CCI. That's when you went oversold. This is the time where you want to take a buy entry. And we can confirm this. We have 50 EMA support at the same time, a hammer and bullish engulfing on the charts. So that's the time where you go long on USD INR, and that's the amount of profit that you'll be getting into this strategy. The main reason I'm using CCI is to avoid the wrong trades. So if I'm going buy, if I'm going long, I am not taking any short trades when you are overbought. I am not concerned at all about my short trades. Let me have a look at a couple more examples so this thing gets drilled into your mind, the concept becomes clear. Let's have a look at Nifty Bank. So I showed you the strategy on the currency pair. Let's have a look at a good index in India, Nifty Bank. So on Nifty Bank around the 10th of July, we have a negative. So this is a 15-minute chart. Previously, we're looking at the 1 hour chart. Now we're looking at the 15-minute chart. So we have a good negative crossover. 25 has gone below 50. What are we looking for? Only short trades, no buy. Trade with the trend. Don't go against it. Don't question the market. So now what are we looking for is an overbought condition, the first overbought condition. So we can see this took a long time. We had no overbought condition in this entire phase. The first overbought condition came around this point of time, and that's when we'll be taking a short trade. You can see the combination is maintained. The 25 remains below, the 50 remains above. So you can initiate the short position at this point of time, and you get this entire profit with you. You can use pivot points for targets, trail stop loss, and you can also use your candlestick approach to set your stop losses, above the candles, below the candles, how the case may be. Another example would be somewhere over here around 17th of July, couple of days back. I'm shooting this video on the 26th of July, so just 7-8 days back, we had a bullish crossover on the 2550 EMA, and now we're looking for a buy entry only buy entries. We are not looking at any short entry when we go overbought. Buy entries are coming here. So uh, the first buy entry would be coming here when you go below minus 100, and we'll use a buy entry here and get that amount of profit. Another buy entry, you can keep on going ahead, but I would suggest try to get it on the first oversold condition. Another one would be here. This is a piercing pattern taking support at the 50 EMA, and your CCI is also indicating a buy. Let's have a look at another example. We have identified index, we have identified currency. Let's have a look at stock on the 15-minute chart. ICICI Bank, one of the main private lenders in the country. So we have a good crossover at this point of time. This is the charts of ICICI on 17th of July again. A positive crossover, 1525 goes above 50. So we'll only look at buy entries, and the buy comes on the first dip on the CCI below minus 100. That tells you you're oversold. Take a buy entry somewhere around this point of time, wait for a candlestick, and get this entire profit with you. And finally, let's have a look at crude oil. So I want to cover all segments: currency, Nifty Bank Index, and your stocks, your crude oil. This works on everything. We have a good, this is the charts of crude oil on 23rd July, just a couple of days back. Again, the 15-minute charts. You can use it on any chart that you want, but just make sure you back test this strategy out before you get it out in the real market. We have a good negative crossover at this point of time. 25 goes below 50, that's a sell signal. We're not taking a sell, we are just using this to filter trades. Only take short entries after this point of time. Only take short entries after this point of time, and CCI goes above in the overbought zone above 100. That's the time when I'll get alert. I have a good dark cloud cover, bearish Rami pattern, taking a 50 EMA resistance, also taking this point as a resistance, and we can sell at this point of time, get that extra amount of juice, and make the profit. One thing, so that's all for what the strategy is all about. One thing I want to keep in mind is there's one more filter if you're interested, is that when things give you a big gap up or gap down, try not to use the strategy in that point of time. Because whenever things give you a big gap up, big gap down, all the indicators are just mathematical calculations and formulas, so they'll just give you a buy or sell, inadvertently. So we don't want to get stuck in the trade like that, because whenever there is a gap, it tends to get filled, so we might get in the wrong side of the trade. So try not to use it on gap ups and gap downs, and let me know in the comments section what do you think about this strategy, and whether you are using any other indicators, or are you using it on any other time frames. You can use RSI or stochastic instead of CCI. So it totally depends on what are you comfortable with. So that's all for now. Make sure you like, share, and subscribe to our channel. Turn on the bell icon so you get a notification when we upload new videos, and I'll see you tomorrow.